This is Super Investors and the Art of Worldly Wisdom. I'm Jesse Felder.
Object to the test!
Since starting his newsletter roughly a decade ago and then founding RealVision a few years later, Grant Williams has established himself as one of the preeminent creators and curators of financial wisdom in the world. His keen yet conversational interviews with some of the most interesting thinkers in the financial field have inspired investors of every ilk all around the globe, and his monthly writings are widely considered invaluable. In this conversation, Grant discusses why and how he recently decided to shift the focus of his business in a more meaningful direction. He also shares what he's learned from his experiences in picking the brains of the greatest investors alive and how it shapes his own thinking today. So without further ado, please enjoy my conversation with Grant Williams.
You ever wonder why fund managers can't beat the S&P 500? Because they're sheep. And sheep get slaughtered.
Grant Williams, welcome to the show.
Hi, mate. It's been a long time since you and I have seen each other, that's for sure.
Yeah, and I should probably say welcome back to the show because we did this a couple years ago. And honestly, for people who are interested in learning, I think more about you and your background, I was really glad to kind of dig into that in the first episode. So I'd encourage people to go back and listen to that. But since then, I mean, really over the past year, you've put out an amazing amount of incredible content on your podcast. I got to tell you, you're probably the only podcaster who regularly makes me feel envious, both the quantity and quality of what you put out. So thank you.
Well, that's very kind of you, mate. I'm flattered because I love your work too. So that's great to hear. Thank you.
Yeah. So I wanted to have you on the show to talk about this new project. I guess it's not really a new project. You've been doing things that make you go for quite a long time, but I guess you pretty much just decided to take it to the next level. But I guess, first thing I'd be curious to know is what was it that made you want to leave RealVision and kind of go out on your own in this way?
Well, I started on my own with, as you said, with Things That Make You Go Home. That was a decade ago. I started on that project. And RealVision came along at about the same time that I took that business behind a paywall. And really that I reached a point with the writing that I was spending an awful lot of time writing it, and the feedback was great, but time is such a precious commodity these days, and I really didn't know if people would be willing to pay for it, and I was very happy if they didn't think it was worth paying for. It didn't really have any value to them, and nobody wanted to pay for it. I just stopped doing it and used the time for something else. So it just so happened that at that time, Raoul, Remy, Damien, and I kind of came up with this idea for RealVision. Crazy idea that it was. And so those kind of journeys set off in tandem. And the RealVision journey for me was 5 years, and it was crazy. I mean, I really enjoyed it. It was a lot of work, a lot of travel, but I got to meet some phenomenal people and have some really, for me, in many cases, life-altering conversations. And the conversations that I like to have, I think you and I are very similar in this. I'm not so focused on the trade ideas. I don't really want to know what people are thinking as much as how they think and why they think a certain way. Because I've always believed that if you can figure out the how and the why, then you can discern the what's yourself. And if you can come up with a framework that takes advantage of the kind of successes and failures of other people, then you can apply those to everything. It's the old teach a man to fish parable, really. And so I put a series of those interviews together and enjoyed every single one of them. And I did those over the year in 2018, and through 2019, the RealVision platform just kind of moved in a different direction to me. That's all. It was nothing sinister. There's no bad blood. It just went down a road that didn't really fit me so well. The kind of conversations that I want to have, and it just for me, it just kind of came to a natural end, to be honest with you. I just reached a point where I thought, you know what, this is great, and I wish you guys well, but I think it's time for me to step off now. And so that's what I did. And but for COVID last year, the stuff I'm doing now, I probably would have done a year ago. But on the other side of that, being locked down in COVID, really gave me the impetus to start the podcast. I hadn't really had any great thought about it, and it wasn't. There's no kind of grand strategy behind it. I was bored and I wanted to talk to people and figure out what was going on. And I just figured, well, if I'm going to have these conversations anyway with a bunch of friends and peers around the world, then why not let people listen in on them? And it was really no more difficult than that. And you were very kindly one of my first guests, and I just enjoyed those conversations so much that it just felt like something that I should keep going on an ad hoc basis. And then again, after doing that really for the best part of a year, from the series of seminars that I did, and then the podcast with Bill Fleckenstein on the End Game and Steph Pomboy on the Super Terrific Happy Hour and Ben Hunt, the Narrative Game. Again, I got to the point where, as much as I was loving them and as much as everybody seemed to enjoy them, I just felt that it was time once again to put this behind a paywall. And for me, it felt like a bold decision, I guess, because you recognize when you build a big audience, and the podcast had a big audience, that as soon as you put a paywall up, you're going to lose a significant amount of that audience. But I think I've seen what happens. I've seen the kind of fallout from trying to build a big audience for the sake of having a big audience. And for me personally, I'd much rather curate a smaller audience, but an audience where there's a meaningful exchange of value, and the work that I do is valuable to people, and for that value, people are willing to pay a nominal amount, because there's so much free content out there, and I've felt over the last couple of years I was kind of drowning in free content, and I was always very happy to pay for stuff that was valuable to me. And I realized that once I pay for something, I tend to pay more attention to it. I tend to invest more time in it, and it cuts down on this kind of deluge of free content that I can give up valuable time on, and really kind of get lost. So I did this because I genuinely believe that content shouldn't all be free. If people are taking their time and their energy, just the way you do with this stuff, if it has value to an audience, then by definition it shouldn't be free. And so, I don't think content creators should be afraid to charge for their work. I think if they charge for it and it's not good enough, then people won't subscribe. And I think once you have subscribers, as you know, with your written work, there's a lot of pressure on you to come up with content that's worthy of people's time and money now. So, that's kind of what I wanted to do. I took that kind of leap of faith, really. And again, the podcast I charged like $10 a month, which is kind of the lowest number that it made sense economically to do, and just kind of held my breath. And so far, the response has been overwhelming. I've put everything up at grant-williams.com, the new website, so everything's in the same place now, my presentations and writing and podcasts. And it's a scary moment when you do that, because you just figure, what if everybody disappears in a puff of smoke? But then again, it's a very rewarding thing when you find that, people do actually value the work I put in, the time I put in, because every one of those podcasts, not just me, but Bill, Steph, Ben, pour their heart and soul into to make them as good as we possibly can. And so that's kind of the journey I'm on. There's plenty more things I want to do, but COVID is kind of putting a crimp in those for the moment. I can't move freely around the world. I've just got off my first flight in almost a year, I guess. And so until I can move backwards and forwards around the world with ease, I'm kind of got one hand tied behind my back in what I want to do. But that's fine for the time being. I'm happy doing these podcasts, and every one of the conversations has just been fantastically educational. And there's so much happening right now, as you know, Jesse, that this is just such a great time to be able to utilize a network that you've developed over the last decade and pick people's brains about some of the confusing times we live in.
Absolutely. And I want to, talk about some of those podcasts you've done because, they've just been phenomenal. And I want to talk a little bit more about the paywall decision also. But before we get to that, and you started to answer this, but I'd like to hear a little bit more about it. You recently interviewed, or one of those phenomenal interviews that you did for RealVision was with Tony Deaton, and that was very well received. Is one of my favorite interviews that I've seen. In your recent interview with him, he uses an apt metaphor for his investment practice. He likens himself to a bus driver with a very specific destination, and he only wants passengers or clients who are on board with that destination. And he does a fabulous job with communicating precisely where he's going so that he knows people who are, on board with him. Okay, we all know where we're going and what we're doing. Turning that lens, I guess, to your business. What is your destination? Where are you taking those of us who are getting on the bus with you?
For me, Jesse, it's about learning something. It's about learning something every day. And every one of those RealVision interviews I did, and I must have done 500 of them over the years, I never left one of those without either having questions answered or questions asked that led me to go and do more work and try and understand things a bit better. And that's really what I'm trying to do is get people to think, get people to understand that there aren't really any simple answers to any of the questions that we've got right now. And boiling everything down to a stock tip or a trade idea, I understand why people want that. I understand because that's easy and it's quick and it gives us something to focus on. But I just figure there's plenty of people that will happily offer you a stock tip. I want to, as I said at the beginning of the show, I want to learn how these people think. And Tony Deaton is the perfect example of that. That first interview I did with Tony was 3 years ago, almost to the week, over in Switzerland. And I spent the day talking to Tony, and I came away just incredibly thoughtful about what we talked about and what I'd heard and how it had really changed the way I thought about a lot of things. And when we went through and edited the content to put the ultimate piece out, I just couldn't. I physically couldn't get this thing down below 2.5 hours, which told me a lot. And the world we live in, saying to someone, "Hey, here's a 2.5 hour video about finance," is a huge ask, and it's a frightening thing to do because the average attention span is getting shorter, not longer. But I just had this feeling, having had the conversation, having edited it, that this was 2.5 hours of profound knowledge being shared in a way that just you couldn't help but think very deeply about what you heard. And so that video went out, and again, when it went out, I held my breath, waiting for the comments to come in. But to be honest, more so for Tony, I didn't want Tony to be disappointed in the reaction in case people say, "Oh, this is too long," and where's the trade ideas and all that kind of stuff, which I got used to seeing. But the response was just overwhelmingly positive, and I could bore you to death with stories about the reaction to that piece of content that I've experienced all around the world over years. Being stopped in restaurants and airports and in the street, and people who want to talk about that interview and Tony and his way of thinking, and it's just been incredible. So that journey for me is what I want to go on. So if I'm the driver of that bus, I want to take people somewhere where they're going to hear interesting perspectives. It's going to challenge their assumptions. It's going to give them more things to think about. And look, hopefully there are some answers along the way. But I think today, setting out to find answers in such an uncertain world is not necessarily a journey that you're going to get a satisfactory outcome to, because the answers are so hard to come by, and there are very few definitive ones because the sands are shifting so dramatically between our feet seemingly every day. So that's really what I'm trying to do is expose people to different ways of thinking, expose them to really smart, intelligent people, and then most importantly, let people make their own minds up. All the conversations I have, the perfect example, we had back to back on the end game with Fleck. We had Lacey Hunt and Russell Napier, both two of the most brilliant financial minds you could ever wish to meet, and both diametrically opposed in what they think is going to happen next. Lacey's been a deflationist for 40 years, and he's been right for 40 years. And he maintains that is our future. Russell's been right there alongside him for the last 2 decades. He's now completely switched to the opposite camp. And we didn't get an answer in those podcasts as to whether deflation or inflation is in our future. But what we got for everybody listening was a wealth of information about how to think about it, about what to look for. And then, it comes down to all of us making the decisions that we think are right for our portfolios, using the knowledge we have. So the more knowledge you can accumulate, the more points of view you can get from super smart people who you can trust the rigor of their process, the easier it becomes for you to make a decision that you can be comfortable with personally. And it's not a point of saying, I think Lacey's right or I think Russell's right. It's about listening to the information you hear, no matter who it's presented by, as long as you know that there's a rigor behind that presentation, and then doing the work yourself. You can't abdicate that work. Asking people for portfolio allocations is an impossible ask because people don't know your circumstances. They don't know the way you see the world. They don't know whether an inflationary future or a deflationary future is going to hurt you. And so that's really, it's a long-winded answer, but that's really what I'm trying to do is help people get the knowledge they need to be able to make their own decisions instead of outsourcing those decisions to everybody else.
Well, I absolutely validate, the feeling behind that. It's exactly what I try and do. I'm far more curious about the framework people use to analyze investments and asset classes and, economic scenarios rather than their conclusions that they come to from that framework. So, speaking of that, and, you mentioned, Tony again, I guess, how influential to me, listening to that podcast, it was fascinating to hear him discuss the difference between an investment business and an investment practice. I guess, how influential was he on your process and thinking about how you wanted to evolve the business that you are developing today?
Well, he's been a tremendous influence. A year ago, more than a year ago, I actually went to Switzerland when we could travel around the world. And I went and stayed with Tony for a few days, and I invited 3 other dear friends of mine from different parts of the world, different walks of life, who know me as a person, who know my motivations, who know what drives me. And I got them all to come and spend a couple of days and pick apart what I wanted to do and tell me, why it wouldn't work. Tell me why will this not work? And we spent 2 days discussing this stuff. And subsequent to that, I spent some time. I'm going to give away a secret here, but it was the most thinly disguised secret, I think, in any of my written work over the last 10 years. But I wrote a piece in September last year called 2 Men in a Boat. And actually, the first piece of that is actually on my website. You can just download it for free and read it. And I talked about a week I'd spent sailing with someone called the captain. And look, it was a very thinly disguised Tony. It was Tony and I spending a week on a boat. And I don't think I fooled anybody, and I wasn't really trying to, but I was trying to protect Tony more than anything else. But he said he didn't mind if I told people. But that's an interesting thing for people to read because it gives you a sense of what it's like to just sit and talk about the world with someone who just has a different perspective to you. And that's the thing about Tony, what you highlighted there from our conversation about the difference between an investment business and investment practice. It's such a simple distinction, but I hadn't spent 5 seconds thinking about it until Tony talked about that. And it's things like that. And for anyone that hasn't listened to that podcast, Tony talks about a business being something where you are there to fill the needs of your customers. Whatever your customers want, that's what you provide them. That's a business. Whereas a practice, like a medical practice, you're there to do what's best for your customers. A doctor at a medical practice will prescribe what he thinks is best for you, not what you come in and say you want. You might want a bunch of sleeping pills, but he's not going to give them to you unless he thinks it's in your best interest. And so something so simple as that distinction between a business and a practice, sets you off thinking about all kinds of different things, about things bigger than finance, about what's important in life and how to think about important decisions you have to make. And so really, Jesse, it's that kind of stuff that there are people who just have a way with that kind of thinking. It's very simple, but it's very profound. And I relish every second I get to spend, not just with Tony, but other people I've met that think similarly, just slightly differently to the norm, and have just a wonderful way of illustrating their thoughts through metaphor and imagery, which makes the point hit home that much harder.
And so I guess just through talking through this, it's pretty clear to see why the paywall makes more sense. I guess with just free content, the temptation is to try and please a much wider audience, give people what they want, rather than what you would necessarily prescribe for them. Also, if you're thinking about, I guess the traditional model for podcasting is through advertising. So supporting it through advertising, and see a lot of podcasts that end up going that route. But then you're forced to try and meet the needs of your advertisers as well. So I guess what I'm most curious about, what was the decision to put, I guess, everything behind the paywall, or is that really the model?
I wish I could tell you there was some great strategy that I'd whiteboarded for hours on end and come up with this, cunning plan to dominate the world. But it's nothing of the sort, I'm afraid. The podcast started out, as I said, because I was bored under lockdown. It became just a fascinating project, and I learned so much from it that I wanted to keep doing it. And then it started taking up a lot of time because there were so many great conversations to have. And the thought behind putting it behind the podcast, I had as the podcast started appearing on top 10 charts in the iTunes store and this, that, and the other. My first real alert that was happening was when people started to reach out saying they wanted to either advertise on the show or they wanted to suggest a guest for the show. And what I found that was common in all those requests as they came through was they all started off with either we've got A, the perfect guest for your show, or B, the perfect product for your audience. And then they proceeded to pitch a product that had nothing to do with my audience whatsoever, or a guest that clearly didn't fit in any of the conversations, any of the kind of streams that I was doing with Bill, Steph, and Ben. And so I realized that this industry, this podcasting industry, in many ways, it's just a platform for people to build an audience. And when you do that, I think you lose the soul and the integrity of certainly what I set out to do. And I realized that if I'm getting 85,000 downloads of one of these conversations over a couple of months, I know that not all 85,000 of those people are my audience. Some of them have come to it. Some of them have started listening to it and dipped in and dipped out or whatever it may be. And that's fine. I don't expect that. But I think inside that 85,000, there's maybe 3,000 or 4,000 or 2,000 people for whom this content actually really resonates and is important, and it helps them out, and it's valuable to them. And I would much rather spend the time trying to create content that's meaningful in people's lives and moves the needle for them, whether it be from an investment perspective or, in the case of Tony, as we've just been talking about, moves the needle in a philosophical perspective for people and helps them think about things differently. That, to me, is way more important, creating meaningful content for people, than building a big audience so that, I'll get in an iTunes chart here, or I'll attract a sponsor there, or, I'm not, that sort of stuff doesn't drive me. I mean, I was telling someone the other day, I've been asked 3 times over the last few years how many Twitter followers I have. And I had no idea on any occasion. And the last time I was asked a few months ago, I took a guess based on the last time I'd been wrong, and I was wrong by 30,000 followers. I just this stuff, it's wonderful, and it's great to be able to reach people and share ideas, and more importantly, get feedback and get access to other people's ideas. But it doesn't motivate me. It doesn't drive me to try and get to a milestone of followers or a milestone of listeners, because I want it to be meaningful to people.
Absolutely. And I want to try and get to some of these, discuss some of these frameworks that you've analyzed, for thinking about different asset classes over the past year. This one is definitely a hot button one, and I generally try and avoid it, but I really did enjoy the Bitcoin
I know where
debate.
You're going.
I thought it was fantastic. And to me, what I really appreciated was being able to hear two totally different but well-reasoned arguments on both sides, and done in a respectful manner, which is something you don't typically see in the cryptocurrency debate, if there really is a debate in most circles. I guess after hearing both Nick and Mike's views, were you swayed in one direction or the other? Was I guess what a lot of people were asking me to ask you on Twitter, which is what would it take for you to, I guess, become less skeptical towards Bitcoin, cryptocurrency in general?
Well, that debate, I didn't really want to dip my toes in the crypto space for several reasons. And it's funny, being so readily identified with the precious metals market as I've become over the last years, just because of a lot of the presentations I've done, which are very kind of pro precious metals. I absolutely understand the case for Bitcoin. I totally get it, and I think it makes all the sense in the world. But I do have questions. There are holes in it that I worry about, and we addressed some of those in that discussion. But I just feel, when you look at someone like Nick Carter, who was he's just a brilliant young man. I mean, a great thinker, a great debater, just a really, really bright guy. And there are so many in that space, similar to Nick, that are incredibly smart, incredibly sound reasoning. And I just don't see where I add value in the Bitcoin discussion, because I haven't done the work they've done in it. It's not something that's preoccupied me in a way it has a lot of these guys. So I've set out from that. I mean, it kind of rose organically on Twitter, that debate, and people kind of asked if I would moderate it, and I was very happy to do so. Look, Mike Green's a great friend of mine, and I mean, in possession of just a towering intellect. And fair play to Nick, not only for having the guts to debate him, but actually standing his ground and giving every bit as good as he got in that debate. I thought it was fascinating on both sides. I didn't get my fears allayed. I thought Nick did an absolutely brilliant job of arguing his case. I really, really did. It didn't answer the kind of fears I have, but then in many ways I didn't really expect it to, because the fears I have are around, what could be done from a regulatory standpoint. They're kind of extreme scenarios that you can't really map out in game theory for. They're either going to happen or they're not. And Tony, when I got to talking to Tony Dean a couple of weeks later, the subject of Bitcoin came up, and Tony again argued it very simply. He said, "Look, it's just not suitable for me. I hope all these people get rich. It's fantastic, but I don't care if it goes to $7 million a coin. It's just not a suitable investment for me." And once again, that really was such a simple way of putting one's case forward for cryptocurrency, because there's this theory that it's all about the price, and if the price goes up, therefore it's a great investment, therefore it's all the things that the bulls say it is. And when we have these sharp drawdowns and the 20% falls like we saw a couple of weeks ago, it's going to zero, and it's this was always going to happen. It's too volatile, and price has become the single arbiter of whether you're right and wrong on it. And I do fear that is the kind of mentality that you do see in bubbles. Like I said, I understand the bull case for Bitcoin. I think it has a future as long as it's allowed to have a future. a legal future within certain frameworks. But my big fear, and I think I put it forward in that debate, is I struggle to see any currency issuing body allowing competition when push comes to shove. When that competition becomes any kind of threat, I don't see anybody allowing it to continue. And that's my big threat. I get the arguments about electricity grids and shutting down access on the internet and all that stuff, but it's way above my technological pay grade. But the simple historical aspect, give me I think Meyer Amschel Rothschild said, give me the power over a nation's currency, and I don't care who controls the armies or something. I'm bastardizing a couple of quotes there, but this ability to create and issue currency is the true sovereign power. And people that have power tend not to give it up easily. And when they see threats that they can squash, they tend to do that. So, I watch it with fascination. I think the arguments that it's a store of value currently, when it's so volatile, I don't think hold water. But as a speculative asset, I've not seen anything like it in my career. And so for the people who are in there speculating with it, good luck to you. I hope this thing goes to 100,000, and I hope you all make money and get out. I mean, or hodl it if that's what you're going to do. But it's just, as Tony said, it's not something that I feel is suitable for me, simply because of the reservations I have about it.
Well, I loved that, Tony was comfortable saying that. I think one of the things that's most frustrating to me in a lot of these debates, if we can call them that, is that there isn't any room for, that's not suitable for me.
Yeah.
And that was one thing that I appreciated about the episode, the Bitcoin debate that you had, is it really did transcend the tribalism, for lack of a better word, that seems to be just permeating markets today. Either you own Bitcoin, or you're an idiot, you're a passive investor, or you're some kind of charlatan, or you're either launching a SPAC or you're a permabear, right? There's no room for diversity of opinion or methodology. To me, are you as tired of all this as I am?
Oh, Jesse, I can't tell you. I just, there's nothing that cuts me to my core deeper than incivility. I just don't think there's any need for it. And, the whole idea of a civilized debate, which, Mike and Nick delivered with aplomb, I have to say, it was incredibly civilized. And you just get so much more out of a conversation when the two sides are listening to each other, instead of trying to talk over each other and shout down the other person's point of view. And I just, it's the one thing about Twitter. And again, it's another problem you get the bigger your audience becomes, the wider apart the fringes of it are by definition. And so you just tend to generate this kind of toxic interaction with people, and being able to hide behind social media doesn't help. And I just think it's a great shame. And I think it's a shame, and it's a great waste of time when you have people with an opposing view to you. Listen to them. And look, fine, if you think they're an idiot after you've heard them out, that's fine. But saying someone's an idiot because they don't own the asset you own, or they don't think the same way you think about something, is just so short-sighted to me. And I just don't see the need for it. And I hate seeing some of the abuse leveled at people who are putting themselves out there with thoughts to challenge the thinking around something. There are people I know very, very well who I've watched way into debates, and particularly the crypto debate. And I know what motivates these people. I know their hearts. I know that they're trying to have questions answered. They're trying to suggest possible problems with it to stress test it and get feedback. And they just get buried under abuse. And the shame is, what you do is you take a whole bunch of people who are incredibly smart and can add an awful lot to the debate on either side. And like me, they just say, I'm just going to check out of this because there are other things to focus on where I don't need to get all the abuse. I can get answers privately. I don't need to share my thoughts publicly. I'll just go and ask the people that I know in the space, because I can have a reasonable conversation with them. but there's no point doing it publicly and letting other people, get the benefit of these conversations, which I just think is such a shame.
Yeah, I mean, it's terribly ironic when you have somebody like Ray Dalio, who's essentially, I guess, completely associated himself with the idea of diversity of opinion, cultivating a diversity of opinion before you form any kind of conclusions. And his skepticism towards Bitcoin is, people react to it with, well, have fun staying poor, Ray.
Yeah. Okay, boomer. Right. Yeah. Have fun staying obscenely wealthy, Ray.
Right. It's unbelievable. And it's a testament to, I guess, the sentiment, the extreme confidence, as our mutual friend Peter Atwater would term it, in a lot of these things. But let's change gears a little bit. I guess part of the Bitcoin thesis that you and I can probably both agree with is the risk of inflation going forward and the debasement of the currency and these types of things. You and Fleck put together the Endgame series, which was just outstanding. I mean, James Aitken, Felix Zulauf, Paul Singer, just to name a few. What a wealth of knowledge and experience you brought together to address this single topic of how does this, money printing and I guess come to an end. What I would like to know, and I think a lot of other people, is what did you really take away from those discussions? Was there kind of a single theme that emerged from all those that you had that help inform the way you're looking at markets going forward?
Yeah, I've thought about this a lot, and I think the big thing that I've taken away from this is nobody knows, and I think that's such an important takeaway. It was funny. Mike Green was, I think, our first or second guest on the series, and his answer to the first question I asked him, which was really the first question in the series proper, was, "Of course, there isn't an end game," and he was absolutely right. There isn't an end game. Right? This isn't about the end of anything, but it is about the transition from now to then to whatever comes next. So that's really what we've been trying to figure out. And as I said, when you have Lacey one week laying out an incredibly compelling case for deflation, and then Russell Napier the next week laying out an equally credible explanation for why inflation is the problem we're facing. And then, Paul Singer, inflationary camp, Dave Rosenberg did a fantastic interview with Steph and I a couple of weeks ago, talking how we're not getting inflation yet. We're going to continue with deflation, and you realize that these are some of the smartest people in financial markets, and they're split right down the middle, and they argue their cases incredibly lucidly, and they've all been right for a long time. And what I take away from that is that this idea of inflation or deflation is probably the most important thing to understand now, and the most important thing to have a viewpoint on, and the most important thing to have a solid understanding of what it does to your portfolio. Because, I've talked about this before, we've had the best part of 40 years of deflation, and portfolios that are structured to profit from deflation will not do very well if we do get an inflationary environment. And so when you look at where risk assets are, particularly the bond market and lately where the equity markets are, you really have to start asking yourself the question that if what we are seeing are the green shoots of inflation, if the commodities complex bottoming and starting to show some real signs of life after a long while is indicative that we're moving to that point where expectations are going to increase, and really that's all it needs to get inflation starting to move, then you have to sit down and you have to think about the potential damage that could do to your portfolio as it's structured now. And so doing that and realizing that this is the big question you need to try and answer, or at least have a plan for, then these conversations with all these incredible thinkers on the end game are worth their weight in gold, no matter what their opinion is. It doesn't matter if it's Lacey, or it doesn't matter if it's Russell, and they're on completely opposite sides of the debate. The information value to you as someone with a portfolio is extraordinarily high, because here you've got guys helping you think through the things to look for in Lacey's case as to what he would look for before he jumped off the deflation train, which is basically the Fed Fed assets, becoming legal tender. And a day after we had that conversation with him, there was a story on Bloomberg that was being mulled over. And Russell saying, here's what you need to look out for. This is what I'm looking at because I think we're going to get to 4, 5, 6% inflation a lot quicker than people think. Now, to have those guys and throw Paul Singer in and throw James Aitken in and throw Felix Zulauf in and Jim Grant and all these incredible brains and just listen to them. And then it's okay to not know, but you're going to probably find an argument over time and over a series of people become more compelling to you. And that's great. That's what this is all about. And then sitting down thinking, okay, well, if we are at a turning point and if a secular inflationary trend is, if not going to get underway, is already kind of starting to smolder, what do I need to do to protect myself? And I think at this point in the market, that's the question you need to ask. We've had this period where it's how do I make money? What do I ride? What do I back in order to make more money? But I think you're getting to a point now with the extreme valuations we see right across the spectrum of the question now being not, okay, where do I invest next to make money? But how do I protect myself from a potential turn in the markets, from a potential turn in inflation? How do I safeguard myself and give myself the best chance of not throwing away the gains that have been bestowed upon me by a very benevolent set of central bankers? And if you feel after doing all that work and listening to all these people and thinking about it for yourself that, you know what, we've still got a tailwind for a couple more years, that's great. At least you can do it then comfortable that you've listened to the best minds in the world. And after listening to them and hearing things that could potentially cause you sleepless nights, if you're comfortable enough to press on, that's great. You can do it with confidence and a sense that at least I've done the work. I haven't just kind of stayed around the dance floor near the band too long and not at least figured out where the fire exits were.
Right, and I think the corollary to the inflation deflation debate is I think everyone probably needs to try and answer for themselves what is priced into the markets. Right? Yeah. Are markets priced for deflation or are they priced for inflation? And to me, it's obvious. They're leaning towards deflation right now. So, I think that's something else. Was there, in your reading of those discussions with all those brilliant minds, was there kind of anything close to consensus on what markets seem to be pricing in today?
Well, I mean, an extraordinarily good outcome on just about every vector, frankly, is what's been priced in here. I mean, we are priced just about for perfection, unless you look at some of the commodities complex, some of the small caps, some of the value stocks. Value is a four-letter word these days, which is great, as you and I know. That offers potentially a fantastic opportunity. And if we do see that turn, value stocks, I suspect, will perform very well. But certainly the bond market, if there's even a whiff of inflation, is a remarkably dangerous place to be. And I saw a stat last week that was mind-boggling to me, that the ECB had bought 85% of issuance in the last year by the European sovereigns and 100% effectively of the Southern European sovereign debt. Now, knowing that and believing it can continue for any period of time or even get bigger should the market come under pressure is a remarkably risky bet to take. Let's just put it that way. And I think there are plenty of signs like that. There are plenty of data points you can look at. In fact, Meb Faber put out a great set of charts on Twitter recently. If you look for Meb Faber, you'll see he put out a whole bunch of kind of charts to show just how big this bubble is. And no matter whether you're looking at sentiment or CAPE ratios or SPAC issuance, there were probably 25 charts there, each of which on its own basis would give you pause for thought. But when you look at them together, you can't help but think back to 2000 and the kind of speculative mania we saw at the very end of that .com boom. And if you've been through that, you recognize what we're seeing now. And look, could it carry on? Yeah, of course it could carry on. But it becomes a case of handicapping. Is the last 10% as easy to capture as the sort of 50th and 60th percentile of this move? Do you want that last 10%, or would you rather leave that for someone else, knowing that last 10%, as we've seen with a lot of these kind of Wall Street bets, Reddit stocks like GameStop, they go up and up and up until they fall 85% in a couple of days. And that's the risk I think you're taking in a lot of these things now is this sudden reversal that traps an awful lot of people.
Well, and that's, I guess when I was talking about, what's priced the market's, what it's the market priced in, it's, where are the risks, right? I think to me, the way I look at the markets and I look at a lot of these, growth stocks and equity valuations and things is they are assuming, they're making a lot of assumptions, that low interest rates, low inflation will stay around for indefinitely. And the risk, even if, it's not possible to get, inflation, like we saw in the 1970s, how much do interest rates or inflation need to rise in order to impact equity valuations? That's something, people ought to consider because, they might not need to rise very much at all in order to make, have a major impact on a lot of these valuations that are, extremes we've really never seen before in the stock market. So, in terms of the inflation debate, that you mentioned this is something everybody kind of needs to come to their own understanding about. Is there one way that you're leaning? I know you have respect for a great deal of respect for both sides of the argument, but is there one way or the other that you are personally leaning?
Yeah, I'm starting to lean towards the inflationary side of things. I don't think it's coming imminently. I mean, Russell thinks it's here and it's going to get significantly higher a lot faster than people think. I'm a little bit more sanguine about it than that. But I think at this point, if you just think about it, right? If you think about where bond markets are, 5,000-year highs. If you think about where equity markets are, all-time highs in many, many cases, and where you think where valuations are, incredibly stretched right across the board. If the deflationary environment persists, how much further can the bond market go? Realistically, you're going to have to, if you want to generate any real returns, you're going to have to go further and further out on the speculative curve to make any real juice from here. And likewise in equities, the crowding into the market leaders, which again we saw in 2000 at the very end there, concerns me a great deal. I think inflation is going to be our future. I think more stimulus, massive fiscal spending, deficit spending is going to be in our future. And what worries me is that stuff finally starts to show in the currencies because the markets are essentially kind of rigged for the time being, although there's an awful lot of water building up behind that dam. And it turns out to be the currencies that people start to lose faith in, which can have a very obviously inflationary outcome. And I think Bitcoin is a little bit of that. I think there's a lot of speculation in there, but I think there's definitely a little bit of that. I think gold and silver being where they are is a little bit of that. And I feel like we could get an acceleration in currency destruction, which will kind of bring about this inflationary cycle. So for me, after doing all the thinking, and loath as I am to go against Lacey Hunt, I think ultimately, I think Russell's view of the future is closer aligned to mine. I just think it's a case of timing, and I think it'll happen maybe later 2021 rather than earlier 2021, the way Russell predicts.
Well, there's so many to me. I mean, I love the sentiment signals, in terms of these things, right? You look back at, 1981, was it the death of equities, cover? Yeah. And we have the almost exact opposite, which is the death of inflation. Recently you have the Economist and Business Week and, these, I guess it's Bloomberg now, but running those types of headlines. We see it with the oil price too. In 2008, Dylan Grice wrote about this recently. I just tweeted it today. In 2008, everyone was talking about, peak oil supply, and now everyone's talking about peak. We've already passed peak oil demand. Yeah. And it's interesting how these things rhyme, and to me, they're signposts that are pointing to the risk is towards inflation making a comeback, towards oil shortages and these types of things. As far-fetched as that might sound, at least the sentiment signals seem to be pointing in that direction to me.
But these things always sound absurd at these kind of points, right? And I think, look, oil, for example, oil's gone from minus $40 to $60. I mean, oil's moved $100, right? And I mean, the minus 40 was a moment in time, but it's a significant move. And actually, talking of Dylan, another great thinker, and Dylan put a piece out the other day and a speech from Janet Yellen where she said, we have all the tools to keep inflation under control. And Dylan, again, very, very simple, but he tweeted it out and he said, we know you have the tools. What we don't know is if you have the stomach to use them. And that's the question. It's not a question of do they have the tools. Of course it isn't. We know they have the tools because Volcker showed us that he had the tools to do it. But there is absolutely no chance that with the financial system so dependent upon a friendly Federal Reserve, that the Fed can do what they would need to do if inflation gets out of control, because the whole thing falls over. So it's going to be at some point a battle that requires some kind of atomic weapon to be dropped by the Fed. And maybe it isn't the Fed, maybe it's government, but somewhere along the line, something I suspect is going to have to be done that is going to catch market participants completely by surprise.
Right. And to me, I guess the way I've framed it is at some point, the Fed is going to have to make a choice between the devil and the deep blue sea. And the devil is raising interest rates to fight inflation and creating another, asset price bust, or fighting inflation effectively by raising interest rates, or like you mentioned, maybe raising taxes enough to fight inflation. I'm sorry, not doing that and trying to preserve the asset prices and allowing inflation to develop into hyperinflation, which is something that William White has been warning about for a couple of years now. One of the things that I think you're known for your podcasts, and rightfully so. They're wonderful, but I think your writing is perhaps really underappreciated. I mean, I've been reading it now for a couple of years, and 2 Men in a Boat you mentioned was terrific. You were also an early skeptic of WeWork. You were one of the first people that I read that was, criticizing the business model, before they came, tried to come public and the whole thing kind of came crashing down. What are some of the themes that you're looking at potentially writing about this year?
Well, I just wrote a piece. My first piece of the year, I wrote about warfare. Ironically enough, somebody asked me at the beginning, actually, of 2020, what my big fear for 2020 was, and I said at the time that it was social unrest was a thing that I was worried about for 2020, and that kind of escalated through the year, and has reached. I don't think it's plateaued yet. I don't think we've seen the end of that, unfortunately. But alongside social unrest domestically, there are all kinds of changes happening on battlefields around the world. And I wrote about the war in Nagorno-Karabakh, which is a disputed territory between Armenia and Azerbaijan. And the story, my great friend Steve Diggle kind of clued me into late last year, and I'd been kind of researching it and looking at it and trying to understand it for the last couple of months. And it's a fascinating story. When you look at the two armies, the Armenian army had basically battered the Azerbaijanis for years. And this has been an ongoing conflict over this land. They've had a ceasefire in place since the mid-90s, but there are flare-ups on this border just about every year. And obviously the Azerbaijanis have had significantly higher oil revenues coming in. They've spent a lot of that money on their military, on the defense spending. And what we saw in September last year was a 31-day war, essentially, during which the Azerbaijanis basically wiped out the entire Armenian army. But they did it for the cost of about $40 million by employing Turkish and Israeli drones. And these drones are not the kind of $15 million per unit Predator drones that the US and its allies favor, but they cost between $1 and $3 million each, these drones. And the Turkish ones carry ordnance, and the Israeli ones not only carry ordnance, but they're called kamikaze drones. And so the Azerbaijanis put these drones up in the air, had them over the battlefield. They then basically jerry-rigged, or in my writing I refer to it as they've launched the world's first MacGyvered UAVs by taking Soviet Antonov A-2 biplanes from World War II, which are basically obsolete, setting them up to be unmanned, piloted. They send them up above the battlefield. They get picked up by the radar, and as soon as the Armenians turn their air defense missile batteries on, the kamikaze drones pick up the signals, crash into them, and destroy them. And this 31-day blitzkrieg of the Armenian army, which led to, I think, the first complete surrender in any war since 1971 between India and Pakistan, anywhere in the world, changes the nature and the face of warfare dramatically. And what we've seen on the battlefield in that part of the world in the last 3 or 4 months is nothing compared with the drone technology that's being worked on now that isn't operational yet. And so outcomes that previously were pretty much baked in the cake suddenly can be up in the air totally, and underdogs can win if they have the right equipment, the right training. The Azerbaijani army did joint exercises with the Turks after having bought the drones last July and August, and then launched this offensive in September. So they basically spent 2 months being shown how to use these drones, launched an offensive, and 31 days later, Armenia had completely capitulated. What does that do for the China-Taiwan conflict, for example? It's 100 miles across the Taiwan Strait for the Chinese Navy at its nearest point. You can do a lot of damage to a stationary fleet if you've got a whole swarm of kamikaze drones. Is the outcome assured now? Well, I would argue that it's not as assured as it was. What about the Middle East? We've seen these drones being used on the oil fields by the Yemenis. So, warfare is changing, and I think these are the kinds of things that people need to think about, and I try and talk about just because they're not really covered everywhere you look. I mean, no one's really taken the time to look at the Nagorno-Karabakh conflict when Netflix and Google are going up every day. People are much more interested in that happening, and I get that. But away from the kind of mainstream coverage and the main asset classes, there are all kinds of interesting things happening, which at some point are going to matter. And I think the key is to spend some time at least focusing on what are the things that can happen, what are the things that aren't on general radar screens right now, but which, with not too much imagination, could be either significant tailwinds or significant headwinds for risk assets.
Well, it's fascinating stuff, and it's actually terrifying to think about a lot of these things. But I know
that's the trouble.
Yeah, and that's why most people, hey, I'd rather just watch my GameStop stock go to the moon, or whatever. But it's something that Ray Dalio has written about a ton, and it doesn't really, out of everything that he gets quoted about. When he talks about the potential for armed conflict in the future, whether it's, civil war or, hot wars around the world, this is something he's been writing about, and it seems to get relatively ignored compared to his, thoughts on Bitcoin or, what have you. And so it probably is something to think about, God forbid, these types of things, expand, but I think it's very important to consider the potential. So,
well, I think the important thing for people to do, Jesse, is and I gave a presentation back in January of 2015 all about warfare and how warfare has changed over the years and how the tensions around the world were rising then. And the first question I got asked at the end of it was, are you saying there's going to be a war? And I said, no, I'm absolutely not saying there's going to be a war. But what I'm absolutely saying is there's not going to be a war. You can no longer assume that warfare is just a non-starter. I think people have to understand that in times of great stress and tension, whether it be economic or social at home, every government is always grateful of a friendly outside enemy that they can rally the people around, and so that becomes the solution to an awful lot of problems. And if you look back at the history of warfare, you'll see more often than not, in fact, warfare between nations has generally happened because of problematic financial conditions.
Well, it's probably an appropriate transition to this question that it's been a wild year with the pandemic, and you've obviously been super busy. Do you have some sort of outlet that you use to get away from these crazy markets and these types of things?
Well, look, I would say golf, but that's even more frustrating than the markets when your game's in the kind of shape mine is. Do you know what the funny thing is? Because I was stuck in lockdown this year, I fostered a dog, and within 24 hours of fostering this dog, I told the shelter there was no way they could ever take him back. They'd have to prise him out of my cold, dead hands. And the dog has just been phenomenal. I mean, the poor thing, I walk him for 3 hours a day, just throughout the day in various intervals, and having that time to go outside. I've listened to a ton of podcasts. I've listened to a ton of audiobooks, and just get some air, stretch your legs, and just have time to think. And sometimes I'll just listen to music to switch off. But it's just, I think the COVID and the lockdown has made it so easy to sit in front of your computer all day long, and just get wrapped up in stuff, and constantly read and constantly feel like I need to have an opinion on everything that's happening, and there's so much going on. And for me, what I've found is just getting up and putting the lead on the dog and going out for a walk for 45 minutes or an hour, and listen to something that either takes me away from what I was thinking about before, or just entertains me, has been a fantastic way to clear my head and be able to kind of come back and think about things differently. And without that, I think I'd be in some kind of institution you'd be talking to me in right now, to be honest with you. Yeah.
Well, now the ad reps at Chewy are going to be reaching out to advertise on the podcast. But anyhow, this has been fantastic. I'm so glad that you're able to take the time to come, discuss these things with me. You're always just a fantastic person to. I love picking your brain. So for those of people who want to kind of keep up with your ideas and your work, where can they do that?
Well, it's long overdue, but I've finally relaunched my website. I've got a proper website now, not the abomination that I had before that when I didn't have any time to do it. So if you go to grant-williams.com, you'll find all the podcasts there. You'll find the letters there. And I say if anyone's had their interest piqued by our conversation about Tony Deedon, you can find the conversation I did with him on RealVision. It's up on YouTube, and I would urge anybody who hasn't watched that to watch it. And you'll also find on the site that letter you can download as a free sample, which is called 2 Men in a Boat. And that, again, is just another wealth of information shared by Tony with me on a week on a boat last year.
And I highly recommend them. I mentioned that I reached out to you actually right when you published that, just to tell you how much that piece meant to me. So I highly recommend everybody go check that out. But Grant, this has been wonderful. Thank you so much for taking the time to do this.
Oh, Jesse, are you kidding me? I'd sit and have these conversations with you every week if I could. I've thoroughly enjoyed every minute of it.
And that does it for another episode of Super Investors and the Art of Worldly Wisdom. As always, you can find notes and links related to this episode at thefelderreport.com. Thank you for listening, and until next time, buy low, sell high.
Man looks in the abyss. There's nothing staring back at him. At that moment, man finds his character. And that is what keeps him out of the abyss.